Welcome to the Stock Option Assassin weekly wrap. We're going to go over the S&P 500 quickly via the SPY. We're also going to look at the dollar and a trade idea for next week. And we will also review a couple of our trade ideas from last week. So first of all, just so you know, it's about 20 minutes before the bell on Friday, March 23rd. So we still have a little bit of time, but the S&P is we're getting a little rally into the close, but I just want to point out the volume today is I don't even think we're going to break 100 million shares. This is just like super anemic volume. So, which is actually, maybe good for the bears case that we kind of pulled back on light volume. Maybe we're going to push up to this next level next week, and I'll, kind of think we might that might actually be the case. But let me show you this level. This is 144.27. I think that might be a little high for us, but where I'm getting that level is if I switch to the monthly chart, and you can see that this pivot is this was our 2011 highs. This is kind of where we hit and pulled back off of, is this candle, and this was June 2008, and then April 2008, really right before the big crash. Is where we might be headed next week or in the following week. I still think we're due for a pullback, but you can't argue the tape. And on the daily chart today, we kind of came down and kissed this 20-day moving average and kind of rallied off of that. So if that's any indication of a little pullback, I still think we have a little gap fill in here. I think ultimately we head to the 50, but it may we may push a little bit higher before doing that. So. I want to switch to let's look at the weekly chart since we are at the end of the week, and look at the weekly chart of the SPY, and you can see that we basically had kind of a pause week. Now this thing might close a little bit higher or lower from where we are now, but you kind of have this spinning top doji, which at the top of an uptrend, this is sort of a pause in the market. This could sort of, it doesn't really mean much until you get some confirmation either way, but it is telling you that there's a little pause in the market on the weekly chart. So we can very, very well retest this 137.20 level and then move higher, or maybe we move higher and pull back later. But what I'm looking for as sort of a lead indicator on this is the dollar. And recently, the UUP is what I'm using as a proxy for this. I switch back to the daily chart. The UUP had kind of been in this downtrend where we created a new low. We had a higher low, a lower low, and then this past couple of weeks we made a new high, a higher high, and now that we've pulled back, you kind of got this little bearish, bear flag, and then today we sort of broke down, and so since we're kind of right at this kind of support area, I don't know if this is going to hold necessarily, but there is a decent chance that this thing goes back and retests the 200. And possibly even this pivot low. So if this happens next week, the dollar continue to lose, the market will rally up, most likely, because it seemed like the correlations, they were kind of off earlier in the week, but it seems like the correlations are back. We'll find out more next week. But if we look at the 15-minute chart of the UUP today, you can see at the open, we started lower, we sold off and kind of ended up flat on the day, or flat for the rest of, the rest of the day. And if I look at the SPY, you can see pretty much the exact opposite happened. We rallied up and then ended up kind of flat on the day. So, I think this correlation is still making sense. And if the dollar has broken support, whereas the SPY has not, chances are the dollar will move lower and the SPY might retest the highs. So even if we get a retest of these highs and possibly a push up into the 144 area, that would not surprise me at all. So how I'm playing that, well, last week we talked about two plays, Disney and Oracle, and let's just look at those. And we talked about Disney was sort of had this big push, kind of consolidating, and you're really still in the range of this candle, and you're kind of getting a little bit of an update on Disney today, up almost 1%. I did not take this Disney trade last week, but what I did take was the Oracle earnings trade, and we talked about Oracle sort of consolidating here. I took a small position, and Oracle popped on earnings, and I got out, not at the top, but I got out pretty much around 10:30 that day. Made a decent profit, and I'm glad I got out because look at this thing just tanked and it's now closing lower. What I did look to put on today in a small position was, it seems like Oracle sort of finding a little support here around 28.50. I did put on a put credit spread here, thinking that Oracle may get a relief bounce, or even if the market kind of heads higher, this thing kind of reverts back to the mean. And if I put on my ATR bands here, we're at the lower part of the bands, and if we revert back to the mean, which I'm using the 13-day EMA, then that put credit spread would be good, and that was a April option. So we'll see how that goes. Trying to, play Oracle on both sides here. Took a little profit on the calls. I think this selling's a little overdue, or a little overdone for them. But what I'm looking for in the next week or so, and I want to see if we push a little higher, is Priceline. Priceline has been in this just relentless uptrend, and people are talking about how Apple's changed. Priceline has gone from, this year, let's see, where's beginning of the year is right here. So basically, started the year around let's call it 475, and we're now trading at 714. That is like a 200 and almost a $300 move, $250 move in just the past couple months, and it really hasn't stopped. It kind of reminds me of the Apple chart. Today in Priceline, we're sort of getting this, top here. Really haven't had any big pullback days. I'm kind of starting to question how high Priceline can go. So for some bearish exposure, I'm not really looking to buy puts, but what I would look at is potentially selling some call spreads. And right now, possibly the let's look at the option chain real quick on that. Priceline, April options. And if I, for those that are new to spreads, when in Thinkorswim, you can go to open interest. I have it on volume open interest, but any of these ones you can change. If you drop this down to intrinsic value, you can see that the April out of the money calls, as any out of the money options, have zero intrinsic value. So when you sell call spreads, it's a good idea to sell things that could potentially go to zero. If Priceline stays where it's at, or even reverses and kind of goes down, these options will go to zero. So I like the idea of selling out of the money credit spreads, which is a very popular strategy. So in Priceline, the strikes are $10 strikes. So what we would look to do is potentially sell, you could sell the, let's just see if I switch this to vertical, you could sell the 740 call spread, sell the 740, buy the 750, collect $2.80. So let's see what that looks like on the chart. If I go back to the chart, 740 is basically, this level. So as long as Priceline stayed below 740 by April expiration, that's even like a $23 move that we have some wiggle room with. If Priceline stays below 740 by April expiration, then we would end up collecting about $2.85. And your risk reward on this is the difference in the strikes minus the credit. So our reward obviously is the credit we could keep, but the risk on this would be $10 minus that, which would put us at about $7.20. So when you look at that as a risk reward, you're looking at about a 3-to-1 risk reward, where 1 being the reward and 3 being the risk. And I think that's a decent trade-off for this type of credit spread. And again, credit spreads, we're looking to collect theta with the idea that the out of the money options would eventually go to zero, or at least lose some of their value, and we would look to collect all or some of the credit. So that's my trade that I want to kind of put out there this week. I did not take the trade today. I want to see if we get a little further push up in there. We may look to sell maybe the 750, 760. So let's see if we get any sort of indications next week. But right now, when you look at the S&P, and we kind of above the mean here. But again, if we look back at the 20, we kind of found some support at the 20 and bounce. So if we get a little push in the next week, then we may look to hold off on that credit spread for now. So you guys have a great weekend. If you have any questions, let us know, and we'll talk to you next week.